Good morning, afternoon, and evening, traders. Welcome to November of 2020. I hope you all had a fantastic October and are getting ready to rock and roll with this new month ahead of us, going into a bunch of fun things. This month has got some wild and crazy stuff going on with elections and everything else. As far as any holidays or anything to keep your eyes on this week, or rather this month, we've got, the only one is Veterans Day, and that's going to be on Wednesday, November 11th. Outside of that, obviously, we're going into the end of November, Thanksgiving. That's going to play a little bit of a big one, that around the corner. A lot of times the week going into that, or even sometimes half of the week before that, can be a little bit choppy, sloppy. Everyone starts kind of calming down for the year going into the holiday season. So keep that in mind as we go a little bit later into November. Things might get just get a little bit slower, depending on what all is going on. First up on the list is going to be the NASDAQ, and the NASDAQ is obviously and unquestionably strong. Incredible move to the upside, holding those higher lows, rallying aggressively, and just screaming up. So with this move higher, one of the big things that, kind of keeping an eye on going in from the last sort of move down, was, are these bears actually stuck, right? We were talking about the bears underneath here, sellers earlier here. These sellers were potentially getting squeezed. That's what this rally higher was. Now we're coming back to that area. Are they going to start getting out of break even? Is this their final shot to get out of the way before that freight train goes flying back to the upside? And well, I think we have our answer. That was a pretty straightforward one. Market came back down towards all of those break even points, regardless of which one you were looking at. It hit all of them, including even some of the older ones from back here and some of the lower ones from down there. The only ones that it didn't hit was that bear bar right at the very bottom. That's the only one that it missed. So those shorts, if they shorted at that point, they're kind of stuck. Now, interestingly, if we look at that bear bar right there, that was a bear engulfing candle. So if we look at the engulfing point, it also missed them. So even if sellers shorted as an engulfing candle, they still weren't allowed down at break even. And now we're seeing the market race back to the upside. So any shorts who were looking to get out at break even there, now we're seeing a rally back up. It's a pretty big clue that they're getting squeezed if they are still in. And, well, I mean, if they are still in and they see this kind of follow through, they're not going to be hanging out for very long. Incredibly strong move. Now, one other thing to consider here, zooming in a little bit, is where this overall upward momentum is coming in, because this is sort of creating some upward gapping that needs to get filled in. You can see some very obvious candle gapping from the high to the low there. What is that day there? That is the 45th week, and then the, after that, 45th? What? Oh, the 5th. There we go. It's 11/5. I was going to say, what in the world is going on? We've got, so November 5th, and then we've got November 3rd with that gigantic pop to the upside. And that creates some upward objectives. Buyers will be looking to complete that move higher. And so far, that opens up targets all the way up to 12,475 or so, looking for continuation back up towards those all-time highs. So big potential to the upside. It's just a matter of whether or not the bulls can keep this thing going. And right now, it doesn't look like they're really planning on stopping. There's gaps to the upside. Everything. The market is just screaming higher. Bulls are just looking to pick up basically any pullback the market will give them at this point. Moving over to the S&P, and very similar situation, obviously, to the NASDAQ. The NASDAQ is a lot more bullish, so seeing the NASDAQ at all-time highs versus the S&P not, aside from those types of differences, it's obviously bullish, right? We're coming into a really strong move to the upside. If we look a little bit closer onto the S&P, we don't have as big a candle gapping going on. There are some, but any objectives that would have created, those have already been kind of filled. So the big thing that I'm keeping an eye on at the moment is this really beautiful break above the wedge top. They kind of gapped over it even, so it sort of job's done before it even had to do anything. And now we're seeing a break back above the wedge top with a higher low. Everything is looking really, really good for continuation, and it makes a lot of sense to see the S&P and the indexes as a whole keep driving back up towards those all-time highs and try to grab that bigger move up. So, I mean, aside aside from the S&P just not being at all-time highs yet, the context comparative to the NASDAQ are kind of the same. So there's not a huge difference between the two. The big one really is just watching the wedge. And given that they've already gapped over it and looking for more continuation up, it makes a lot of sense to see these bulls still scream to the upside and try to grab up towards those 3600s, maybe even a little bit further. Now on to gold, and gold is, oh man, they put in one very nice bottom here, or at least a potential bottom. We haven't really seen that lift higher, but given the way that things are going right now, we had that big giant rejection, that huge bear whip that happened in kind of early August. That put in a very strong base, and when the market came back to it in early October, it rejected very aggressively. Then they came back into it again right ahead of November, and, well, guess what? It rejected there again. But this time around, the bulls didn't just show up with a little bit of oomph like they had before. This was a nice pop, and it wasn't just a pop that didn't really do anything per se, like breaking structure or anything. This pop broke falling resistance, it broke a potential wedge to the upside, and it's breaking it with some serious aggression. Bulls are showing some great conviction to the upside, and likely any pullback that happens now back towards the wedge is just going to get bought right back up again. Seems like wedges are the theme going into November. But with this breakout, buyers are going to be looking for a pullback and a continuation right back up to the obvious zone that stands out here. That big round number 2000, huge psychological impact that's going to have on the markets, and we could get stuck there for a little while. It wouldn't necessarily be a surprise to see the market kind of whip around that 2000 for a little while. If we look at what it did before, that's kind of what happened. It raced up to it, got stuck, finally broke above it, and then got pulled back to it, broke down underneath it, got pulled back to it, pulled back to it. It wouldn't be a surprise to see it get pulled right back onto it again. So that's kind of the objective at the moment, is just looking for more continuation from the bulls to try to get back to 2000 and maybe further. If we can start cracking above the 2000, I mean, realistically, if they can start getting above 2020s, 2030s, then there's not much left holding it down until we get back up towards those highs and maybe even up into the 2100s. So gold is looking very strong. And with this wedge breakout to the upside on that much bullish conviction, and then the follow-up was a doji, I don't think any buyer would really want to do anything other than be a buyer right now. Sellers, they just don't have an argument right now. So from the sell side, it's a stay away as far as possible, and from the bull side, it's kind of a, did it dip? Anything? Okay, cool. That's a buying opportunity. Crude oil, starting to get, man, whatever you want to call this. The big thing, let me get the local crosshair on, just so we can see the prices, because it's been an absolute train wreck around 42. Buyers tried breaking above that 42 and, I mean, kind of made it work for a little while and then failed underneath it and then got back above it and then failed underneath it, and now it's holding as resistance, and now we're starting to see the bottom drop out. This is either going to be a breakout pullback continuation for sellers, right? We've got the wedge kind of breakout, very obvious structural move, or this is one of those situations that doesn't end up getting the breakout continuation. You can see the sellers are trying, but so far they haven't been able to get back down underneath that support. And as long as that support stays there, sellers are going to continue to have a hard time, because now if it starts rotating back up, buyers will have that breakout attempt to the upside, and there's going to be a lot of potential juice to drive it up, because guess what's above there? It's that big $50 mark, but it's not just the $50 mark. It's also that monster of a gap fill up there that's just begging and waiting for the market to come back to it. Obviously, we had a very sharp V bottom on the lows, and a lot of times with that, you'll see these quick little dips, but if the bulls are still there, there's really not any need for concern. Realistically, this looks like buyers are just buying the wedge down. Now we have to wait and see if they're going to break the highs, and if we can break above the highs, then it's on up towards that $50 mark. Now, if they fail, right, playing the counter argument, if bulls fail to get it to go to the upside, if we have a situation where, you know, instead of getting that nice continuation, we get the attempt to go up, and then they break out, and then they get slapped off of 45 again. Well, that rotation back down, we're probably going to see support once again, right back around the base of that area, around 37s or so. And if it starts breaking through that, that's kind of the last ditch that sellers have floating around down here that they're going to have to work through at around 32.50, 33. And then it's a wide open door all the way back down towards the 15s. So it's a slippery slope if the sellers can start getting it to push down. Obviously, buyers don't want to see that happen, but if the buyers don't want to see that happen, they're going to have to show up to the party and start breaking above some of this bearish structure. Over on corn from the agricultural side of things, obviously very bullish to the upside, and with this rally to the to the highs, we're seeing a bit of profit taking. Do you blame them? I mean, we ran all the way from the lows that were trapped underneath at 330s, and it's been squeezing all the way up above, almost to, well, a little bit above 420 before backing off a little bit. Now, once it did pull back off of the highs, that was a pretty sharp, aggressive pullback. And the sellers are also defending. So although the market is very, very bullish and buyers are going to want to be all over this thing, it's hard to ignore the fact that the sellers are still defending these highs up here, which means that if buyers want to come in, they would much rather be a buyer down here, right? Buying on the cheap, buying traps underneath the lows, buying dips. Nobody wants to buy way up at the top just to end up holding onto the bag while the market crumbles underneath them. Nobody wants to be that person. So as the market continues to reject up here, no buyers are really going to want to hold on. If they can start breaking above the 420s, going into 430s, and then get another pullback, that's going to be that big zone of resistance that would then turn into support for potential continuation up. And that would line up pretty well with a channel as well. So there's a lot of things that line up pretty nicely here to the upside for corn. And I think really the big thing that we've got to be kind of cognizant of is just it's too high up right now, and the sellers are showing too much resistance to want to be a buyer way up here. It makes a lot more sense for buyers to be looking for a dip to pick up something on the cheaper end of things. Now, again, always want to play devil's advocate. If we zoom out a little bit here, don't lose sight of the bigger trend. Corn is not doing great in the overall picture. Remember, back in 2013, it was trading in the 900s. Now it just got back into the 400s. It's not doing great. There are a few nice things when we zoom out to this level that we can see. There's huge amounts of MACD divergence going on off of the lows. And even the nearer term, there's an even nicer one that's set up there with continuation up. The big thing really, now that we've got this nice strong leg to the upside like we've seen before, we've got to get the pullback and we've got to continue. But more than just that, we have to sustain those higher highs and higher lows, because that's what happened the last time. Corn had a really, really nice rally up, and then they got the pullback, really aggressive, nice rally higher, and then all of a sudden lower high, and then it dumped all the way back down, and the buyers just lost interest. They couldn't hold it up anymore. And this is kind of looking pretty similar to what happened over here. So if bulls are going to keep this going, we're probably going to see higher prices. That would make sense, and maybe even towards a channel top, which would be floating at around the 440s, 435s. But at the same time, man, if we start finding resistance up here, there's a good chance that it just ends up falling apart again, because that's what it's been doing over and over and over again every time it comes in towards the highs. Just be a little bit careful up there. And then the final stop over on the cryptocurrency side with Bitcoin for the normal wrap up, and then we'll take a look at some stocks. Bitcoin has been just ripping astronomically to the upside. Huge amounts of bullishness, and this could be looked at in a couple different ways. We've got the wider potential channel, which is fairly obvious, and we're bouncing off the top of it. And the only reason I say it's fairly obvious is because, well, it showed response there. I've got to believe it. But it is also fairly apparent that we could draw another channel somewhere inside here like this. And that gives us support and resistance on both sides there that hold quite nicely too. So we've got a couple different things to work with that give us a few different perspectives. Both of them are obviously bullish, but the big thing that's kind of standing out here is one of these channels is, in this case, the weaker of the channels, a little bit angled down, and we're breaking above it. Now, whenever we have any type of bullish structure, whether it's a channel, whether it's a wedge, whatever it is, a bullish move of some kind that's breaking out above, right? So bullish breaking higher. That's very, very difficult to sustain. That takes a lot of money to keep that up there because it's already at the highs. Now you're trying to break it out higher and keep the prices there without having everyone start selling into the rally. That takes a lot, right? There's a lot of pressure that comes into that. This is a very aggressive move up, right? Bitcoin's showing some serious strength. It's going a little bit more parabolic, maybe into a 3-press top. So up here into the 15,500, 16,000s. A little bit dangerous. Again, trying to be forced into buying high is never a fun situation. But if they can start pulling back a little bit, getting a nice dip back down towards, even lower 15,000s, upper 14,000s are going to be a zone of interest for buyers because the strength is so high. Now, the other end of the spectrum is this wider channel. And if this wider channel is the one that the market is going to be more responsive to, then we're likely going to see some form of topping going on here, which will come in the form of usually 1 or 2 pushes, which then ends up failing back towards the bottom of the channel. Now, there is a saving grace. Don't let that freak you out, because sometimes when you have a bullish channel, pulling back to the bottom of the channel doesn't necessarily mean pulling back per se. That might just mean that the market is rallying so aggressively higher that a pullback is nothing more than the market going sideways and consolidating for a little while until they finally, ding ding, bounce right off of the bottom there and they get that pop. So keep that in mind while we're rallying up aggressively. It makes a lot more sense that we see the market transition into sideways. It's easier for the sellers to push back if they have time to build in towards the high, just like we saw over here. The market doesn't just reverse on a dime. Sometimes it does, but more often than not, you'll see it form these nice, consistent tops, and then it'll make a decision. Same down here, forms a nice, consistent bottom, makes a decision. We haven't had any type of sideways up here, so there's no decision being made yet. It's still going up, and as long as the bulls are still showing conviction, buyers are going to continue buying. The big thing is, once the buyers start letting off the gas pedal a little bit, how big is that next pullback going to be? All right, well, that's going to do it for this month's brief. Stay safe out there, and like we always say, keep those stops in play. Let the winners run. Hopefully you have a great month ahead of you, and hopefully you've had a great October. We're going into the end of the year, so just be careful, because remember, we're going into Thanksgiving. We've got a lot of the Christmas shopping stuff going on. I know it's kind of gross to talk about this early into the month yet, but it is around the corner, and these are things that we've got to keep an eye on because, well, if everybody's already home, Christmas shopping is usually going to take place online. And if everything is taking place online and nobody's really going out, there might be some really great volatility in the markets because everybody's going to be home already. Why not put some of that money to work and get some day trading going on? There's already been mass amounts of new day traders coming into play and a lot of mass amounts getting kicked out with all of this volatility. But that new money, that extra money all coming in, especially going into the holidays, it's something to definitely keep our eyes on. So be safe out there, enjoy, and we will talk to you all in December. Thanks.